Good morning and welcome. We are at the start of a day where technically it was a holiday, but that's been moved to tomorrow. So we're back with you to try and take you through all that's happening in global markets as well as all the stocks to watch out for in trade today, outside of course, all the business news that you need to catch up with since yesterday. So quickly, I'm Harsh Saita. With me is Ankita Saxena. That's my co-anchor who's been on a brilliant vacation. So I will catch up about all of that, but for now, Globetrotter Ankita, talk to us about how global markets are doing.
Good morning to you, Harsh. Yes, so the US markets rallied yesterday, and that primarily came on the back of the tech stocks rallying. And Dow Jones, we saw Dow Jones rising after a good 7 days. And yesterday, of course, Dow was up for the first time in 7 days, as I mentioned, as Wall Street readied for the end of the first half and investors piled back into the tech stocks. The popular technology and artificial intelligence names such as Nvidia, Meta Platforms and Microsoft rose, reversing Monday's sell-off and lifted the tech-heavy Nasdaq as well. The consumer discretionary and travel stocks also took a flight as Delta Airlines boosted its financial guidance. Now, the airline stock surged 6.8% in trade. And despite Tuesday's broad market rally, Walgreens shed 9.3% after slashing its full year's profit guidance and reporting a weaker than expected earnings. Now, the Dow rose 212 points, the S&P 500 advanced 1.5%, and the Nasdaq surged more than 1.5%, led by the technology stocks, of course. Now, a fresh batch of economic data also came out that signaled towards a resilient economy despite the fears of an impending recession in the US. Now, the May durable goods was expectedly increased, while the consumer confidence also improved more than expected in the month of June. Now, the new home sales also topped expectations. So that is a set of data that really pointed towards the fact that the US economy is pretty resilient, and the expectations of an impending US recession could be just a fear in the markets, perhaps. Now, let's move on to the European markets. European markets also closed on a cautious high note after spending most of the session red as investors monitored the comments from the central bankers at the ECB forum in Sintra. Now, a higher for longer message was on rates was clearly stated by some at the Sintra conference. DAX was up 0.2%, FTSE up 0.1%, very flat, and CAC was also up 0.4% in trade. So that's the global handover, a positive global handover coming in there, Harsh.
Right, absolutely. Positive global handover after quite a few days that we've seen. So that's one plus that's already reflecting on the SGX Nifty. But let's quickly take you through what oil is up to. Oil prices don't seem to be in, the cool off doesn't seem to be running away too quickly. It doesn't seem to be in a hurry at all. In fact, we're seeing, Brent just below the $72.5 a barrel now. So you're clearly seeing retreating oil prices on the back of what will be a very critical, Federal Reserve commentary, which will talk to us, of course, about where they see rates going, because it's a precarious position, right, Ankita? What we are largely expecting is that the Federal Reserve will hold up rates, but at the same time, globally, there is a very hawkish stance which most central banks are taking, and that's what's really reflecting on oil prices. There is a risk that oil demand may be hurt in a significant manner, and all of this despite Saudi Arabia all set to cut production of oil from the 1st of July. 1 million barrels a day, just to refresh on that piece, will be cut, and despite that, you're seeing oil prices continue to remain subdued. And that's really the theme, very interesting theme really playing out in front of us. You're seeing WTI below the $68 a barrel mark, and we're seeing Brent below the $72.5 a barrel mark. But quickly taking you through all the events you need to keep a track of in trade today.
Right, Harsh. So as of today, we need to keep a track of the SEBI has a board meeting, and what will be under discussion are the FPI disclosure norms and the mutual fund total expense ratio will be the points of discussion. And in the annual general meetings that will be in focus today will be by Infosys and Oprah Realty, and BPCL will be having a meeting to consider a fundraising via rights issue. In the global cues, we have the Federal Reserve Chairman Jerome Powell, who will be addressing as of today, and we will be getting you all the details of that address. So these are the events that we will be tracking very closely.
Right, and quickly moving to stories making headlines globally with regard to where the US economy is concerned. Some worrying commentary coming through, and that we are tracking for you this morning. US will enter a downturn in the fourth quarter. It says HSBC, and that will be followed by a year of contraction and a European recession in 2024. That's what HSBC is predicting. In its mid-year outlook, the British banking giant said there are several economies that are faced with flaring recession warnings, and as the fiscal and monetary policy seem to be out of sync with stock markets as well as bond markets, that could be a risk.
And in more news flow from the US, home sales surged to the highest level in nearly 1.5 years in the month of May. New home sales jumped 12.2% to a seasonally adjusted annual rate of 763,000 units last month, the highest level since February 2022. The analysis showed that construction spending on new manufacturing facilities has in fact doubled so far this year compared to the 2005-2022 average.
Right, and UBS plans to slash more than half of Credit Suisse's workforce from the start of next month. This comes after the result of the bank's emergency takeover. The bank is planning to slash more than half of Credit Suisse's 45,000 workforce. Bankers, traders, support staff in Credit Suisse's investment bank in London, New York, and in some parts of Asia also are expected to bear the brunt of these cuts.
And China's Premier Li Qiang was speaking at a conference, and that's where he showed his bullishness on the country's economic growth. He said that the Chinese economy has been growing rapidly and can hit the Communist Party's target of 5%. Although there is no information on the recent quarter, but it is said that it is more than 4.5% as of now. Remember, the world's second largest economy rebounded rapidly from the pandemic lows but faded just as fast. The private banks have since cut their outlook for Chinese growth.
Right, and staying with China, JP Morgan continues its bearish stance on China's yuan despite its recent slide. JP Morgan expects the possibility of a circuit breaker with strong fixings of a preemptive move to prevent currency weakness going non-linear. Meanwhile, the currency rallied on Tuesday after China's central bank set its daily fixing stronger than market expectations for the second consecutive day.
And well, good news for all the cricket lovers. The 50-over World Cup to be hosted by India is just over 3 months away. And the schedule for the World Cup is already out. Let's go across to my colleague Karishma Singh, who has filed this report earlier, to know what the schedule looks like.
The schedule has finally been announced. India, of course, playing in all their matches in separate cities, starting with Chennai, where they take on Australia, then come to Delhi, where they take on Afghanistan. Then the biggest match that the entire country will be waiting for, of course, India versus Pakistan at the Narendra Modi Stadium in Ahmedabad. Then they move to Pune for the match versus Bangladesh. Then they are going to Dharamshala for the match versus New Zealand. So these are the top 5 matches that India is scheduled to play. They take on South Africa in Kolkata at the iconic Eden Gardens, play their qualifier in Mumbai. So it is going to be, of course, very, very important matches and a very exciting time for the Indian team and all the cricket fans across the country. And remember, this is going to be a multi-nation tournament and all eyes will be on the Indian team because the expectation from them is going to be what they had achieved in 2011, which is win the World Cup. So the expectation going to be the same, and interestingly, if India qualify for the semi-finals, they will play it at the iconic Wankhede, but if they are playing the semi-final against Pakistan, then that will happen in Kolkata at the Eden Gardens.
Right, thank you so much for that, Karishma. But I'm going to quickly need to book my tickets for the 15th of October straight to Ahmedabad. So we'll slip into a very short break. But jokes apart, more on the other side. We'll go straight to Asian markets. Right, welcome back. You're watching Market Cafe on ET now, but let's quickly take you through how Asian markets are doing. We saw cautious setup with regard to Europe. We saw US largely in the positive, so positive cues coming through from the US, but Asia not looking as bright at the moment. We're seeing a 0.5% cut on the Shanghai. We're also seeing the Hang Seng slightly, marginally lower in trade, 0.4% lower, and we're also seeing losses on the Kospi at the moment. So Kospi is also slightly a tad bit lower, 0.4% or thereabouts lower is where the Kospi is. With regard to the other Asian markets, you're looking at the SX 200 as well as the Nikkei, both in the green. The SX 200 up 1.3%, rising quite well, and we're seeing the Nikkei also up around 0.7%. So those two are currently trading in the green. It's a mixed set at the moment with regard to the Asian markets. When I'm looking at the US futures as well, slightly in the negative. So there's a negative bias coming in from there, but the SGX Nifty is looking solid. Around 1/3% is what it's gaining, around 50 plus points higher is what we can expect on the Nifty at the start of trade, hopefully, Ankita.
Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Harsh Saitha. Now let's quickly move on to news coming in from the domestic front. Now NSE has withdrawn the circular shifting the bank F&O expiry to Friday. My colleague Anurag Joshi is here with more on this announcement. Let's take a look.
NSE has withdrawn a circular it had issued on June 6, which had shifted the expiry day for its bank F&O contracts to Fridays instead of Thursdays. Now, the rationale for this change has been that this clashed with BSE's key BankX and Sensex F&O contracts, and this decision has been taken by NSE after a mutual understanding with its peer BSE for two reasons. So one is to avoid concentration risks and to enable a more balanced development of the derivatives market. Now, again, the reason for doing this is that this would have clashed with the expiry of the BSE contracts. Now, just to mention that this new norm of NSE would have been applicable from July 7. So now that's now changed, and the first expiry had this norm gone through would have been July 14. So now NSE has withdrawn this.
Right, thanks so much for that, Anurag. Let's quickly move on. Food and grocery delivery company Swiggy's losses for January to December 22 ballooned 80% up year on year. What's really our understanding is Swiggy's key investor process revealed that its share in Swiggy's loss had shot up to $180 million in FY23 from the $100 million number in FY22. This translates to an aggregate loss of around $540 million for Swiggy for FY23. At the same time, the delivery platform's food delivery vertical saw a growth of 26% in gross merchandise value, which is largely the metric with regard to sales. The quick delivery vertical, Instamart, saw a 5-fold jump in its gross merchandise value. My colleague Sumita Karir is here with all of the details on this one.
Food and grocery delivery company Swiggy's losses for the January to December 2022 period jumped by 80% in FY23. Its key investor Process, which holds a 33% stake in the startup, has indicated in its annual report. Process has also said that its share in Swiggy's loss had shot up to $180 million in FY23 from $100 million in FY22, ascribing that to its investment in Instamart, which is Swiggy's quick commerce arm. Now, very important to understand that this is coming in at a time when Swiggy's chief, Sriharsha Majety, said that the company's core business, food delivery, had turned profitable in March 23 and was on the path to turning profitable. And in fact, over the last few months, Swiggy has also seen its valuation being cut by some of its investors, including Tesco and Baron Capital. At least 2 markdowns have happened. So what else does the report say? Now, Process has also reported a year-on-year growth of 26% in gross merchandise value, which is GMV for Swiggy's food delivery business. And that, it says, is primarily due to the large restaurant base, which is still lower than Zomato, its nearest rival. In fact, it also says that in the last 2 reporting periods, Swiggy has concentrated on reactivating users, increasing monthly frequency, and improving user conversion.
All right, moving on then, the much anticipated HDFC Bank merger is all set to take place on July 1st. And the delisting of the HDFC stock from the exchanges will be effective from 13th of July, after which HDFC will be trading on the exchanges as HDFC Bank. My colleague Anurag Joshi is here with more details on this. Over to you, Anurag.
India's biggest mortgage lender, Housing Development Finance Corporation, will merge with HDFC Bank on July 1. As HDFC Limited fades away from India's financial landscape, what a better way to keep the memories and, importantly, the legacy of the institution that introduced and revolutionized home loans as a product in the country alive, than to dedicate a gallery to the man who started it all. The H.T. Parekh Legacy Center is dedicated to the founder of HDFC, H.T. Parekh, who started HDFC in 1977 and was soon joined by his nephew Deepak Parekh, and they introduced the concept of home loans to millions of Indians who had earlier a thought of buying a house as a dream. And that dream came true through housing loans, which came with reasonable EMIs. And that's what revolutionized the idea of the spread of housing loans in the country. And HDFC in those ways had a first mover advantage over other lenders which came into the market in the years and decades later. The H.T. Parekh Legacy Center is dedicated to the life and times of the man who started HDFC, and it gives a good peek into history about the growth of HDFC itself as an institution and its rise as India's biggest home loan lender.
Right, thanks for that, Anurag. But one stock which has been in focus as well is Interglobe Aviation. Several tailwinds continue to drive the stock to new highs. What's working for the stock, and could rising competition spoil the party? Sound breaks it down for us.
Well, for the first time since 2019, the first half of the calendar year has been the best year for Indigo. Nearly 26% returns so far in the first half of 2023. Now, last time we saw something like this was before COVID, 34% return in 2019. So what is leading this rally for Indigo in 2023? Firstly, it's the dominance that Indigo's dominance that has been continuously increasing. Now, this has also been aided because of Go First shutdown and because of some fleet issues that we have been seeing within SpiceJet. And if you see on the dominance factor, Indigo's market share has now increased to more than 60%. Also, given the fact that Q1 is a seasonally strong quarter, yields have increased sequentially. Analysts are expecting at least a 10% growth on the yield front, also because of the Go First shutdown. Along with this, the cost are also very much stable for the company on a sequential basis. Fuel prices have come off, while INR, that is Indian currency, has remained pretty much stable, which means that the cost could also be on the lower side for Indigo in the first quarter of FY23. Now, also the air traffic has been increasing on a sequential basis and also on a month-on-month basis. Now, the daily air traffic so far in the first quarter of FY24 has increased nearly 3% on a Q-on-Q basis, while it has increased nearly 20% on a YOY basis. basis. Also, the company is focusing more on increasing the share of international airspace in their total capacity mix. Currently, it's at around 23%, and they aim to take this to around 30% over the next 2 years. Now, increasing focus on international space also means that their margins could be higher going forward. Also, among the airline space in India, if you see, Indigo's balance sheet is the strongest. They have free cash of close to 12,200 crore rupees, and they also aim to double their fleet count by 2030. From 304, they aim to take it to over 600 over the next 7 years. Also, recently the company placed an order for around 500 aircraft, which would aid their fleet size beyond 2030 as well. Now, if you see, recently a couple of brokerages also came out with bullish note. Firstly, Investec, and second was UBS, and they both are expecting a blockbuster first quarter of FY24 earnings from Indigo. In fact, UBS has gone ahead and said that the first quarter FY24 EPS could be 37% higher than the highest ever annual EPS that the company had reported in financial year 2018. So a full financial year EPS versus only first quarter EPS, and that too is expected to be 37% higher as per UBS. However, there are a couple of risk factors when it comes to Indigo. The first one is the increasing competition. Now, Tata Group is looking to merge its airline operations, and that could be a big competition for Indigo going ahead. And the second is an overhang, not much of a risk that I see, but Gangwal Group is looking to sell their stake, and they own around 29.7%, and the lock-in period ends in July, and they could sell stake up to $1 billion. That is what the street is expecting. So that could be one overhang on Indigo share prices.
All right, then, well, the party for Indigo is not over as yet. Already given a return of a good 26% year to date. And, well, Vijay Kedia, who's the MD of Kedia Security, also sounds very bullish on the stock. Listen into what makes him bullish on Indigo and his overall outlook for the aviation industry.
Like airline stock, and I have invested in that. I've invested in Indigo. That is again a disclosure and disclaimer. Of course, I'm not a consultant, so I don't recommend shares. This is what I have done just for the benefit of your viewers. I've invested in Indigo, being the largest company and the most profitable company in airline sector. And I am bullish in airlines. I think what had never happened in maybe 20, 30 or 50 years in airlines industry should happen in next 5 years. This is, as on today, when I'm talking to you, I have this opinion. Airlines is a sunrise industry. In spite of all those bad things and about bad cash flow and whatever negative, opinion of others.
Right, those were Vijay Kedia's views as well on Indigo. To close the loop, but very quickly, India's startup ecosystem needs more local money chasing companies than foreign capital. That's what Zerodha's CEO Nitin Kamath thinks. Speaking to ET Now's Aishwarya Patil, he shares his take on the current startup space. Here's an excerpt of that conversation.
Questions are being asked about the governance issues in a lot of these startups. Maybe the VCs are also to be kind of blamed slightly here, because maybe they overestimated the size of Indian markets, right? As in, maybe that whole 7-year fund cycle, like it works well in the US. Yeah. You put money and in 7 years you have an outcome. It may not work in the Indian context. And so what happens is, if be it the VC investing or be it the startup building a business, if you are doing it with the wrong expectations, outcomes won't be right. I mean, it's not about edtech. I think it's gonna, you're gonna see this across, right? Correct. And the fact that everyone was pushing to become unicorn and decacorn or whatever in a market where it's very hard to generate revenue from the user was never going to end well. As in, at some point there would be a realization that maybe the valuations have outrun, right? And then the issue is, when there's so much pressure to perform, founders can take shortcuts, right? I mean, it's just not in India. You can see it anywhere, right? I mean, if you give a lot of money to a startup who's not really valued that, the founder almost always ends up doing some kind of a mistake. So, but the problem is the way the narrative is going to be is that all the blame will somehow come on the founder, and then it can change. The narrative can change into saying somehow Indian startups, the governance issues are higher. But I think the blame lies, of course, in the founder if he's taken a shortcut, but definitely with the VCs as well. For setting the wrong expectations or wrong goals for the founders to chase as well.
One of the things that auditors are now pitching to VCs is giving out their financial numbers, especially startups, because at least the listed companies do have to abide by what SEBI says, but startups, they're sort of have a leeway over there. So do you believe, how do we put this framework into place so that these financial issues or corporate governance issues don't crop up?
No, I mean, see, the thing is, these are private companies, right? As in, I mean, I don't know if I got something to comment. You know, if someone's going to invest in a private company and he's ready to be a little lax, I mean, like, I don't think we both can have an opinion on this. Right?
Well, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we get you all the stock-specific action.
Welcome back. You're watching Market Cafe on ET. Now, let's quickly take you through all the stocks that were in the news since yesterday. Let's take you through all that could lead those stocks to buzz today. And we have Lisa, as always, in the studio. Lisa, talk to us about all of those.
Well, good morning. So starting with the SBI, they're looking to acquire 20% stake in SBI pension funds, and that is through SBI Caps. Ramco Cement will be commissioning line 2-3 of their Ramaswamy Rajanagar 3,000 tons per day capacity of clinkerization. Titagarh Rail System, they have received a letter of acceptance, and this is from the Gujarat Rail Corporation, and the order is worth around 857 crore, and this is for the standard gauge cars. Moving on to TCNS Clothing, that also will be in focus along with Aditya Birla Fashion, because the Competition Commission of India, they have approved the acquisition of TCNS Clothing into Aditya Birla, which will hold around 51% stake in the company. Sugar stocks is also expected to be in focus as the cabinet and at its meeting, they will approve the FRP, that is the fair and remunerative prices for sugarcane for the season of 2024, and it is expected that the FRP of the sugarcane will be increased by rupees 10 per quintal. So sugar stocks will be in focus. Moving on to Sapphire Foods, the seller Ruby Limited, which sold around 30 lakh shares. The buyers' names are out, and it includes prominent names like Goldman Sachs, Society General, Nomura Trust, and also Aditya Birla Sun, among others. Lastly, Ashoka Buildcon. Secura is in talks to buy Ashoka Buildcon road assets worth rupees $670 million. So these are the stocks that will be on investors' radar for today.
All right, thank you so much for that, Lisa. We will be tracking these stocks very closely, but you also have the brokerage notes that came in this morning. Do tell our viewers what are the brokerages saying and what are the stocks that we need to focus on.
Right, a couple of brokerage notes on the life insurance company, starting with CLSA. They have come out with a report on HDFC Life, and they have set an underperform rating. They have maintained an underperform rating on the stock with a target price of around 680, saying that the rally leaves little room for upside. And also they have maintained that FY24, that will be a stable year for HDFC Life, along with stable margin and strong protection momentum. But on the other hand, they have maintained a buy on SBI Life, and they have also hiked the target price to 1,550 from 1,375 earlier. They added that the soft Q1 that is expected because of the high base, but they are targeting a strong growth for FY24. Moving on to Tata Motors, again a CLSA report on it. They have maintained a buy on Tata Motors, hiking the target price to 690 from 624 earlier. They say that GLR retail volumes, they were very strong for May 2023, and even the EBIT margin is likely to hit around 6% in FY24. And on the domestic CV volumes, they said that is stable. Lastly, Jefferies has also come out with a report on Gujarat Gas, saying that they maintain underperform on the stock at a target price of 420, and they have cited that the propane economics have been unfavorable for Q1 FY24, and they also see continued pressure in going forward in Q2 FY24 on the back of propane cuts. So these are the stocks on brokerage radar for today.
So all of those names on the brokerage list as well as on the stocks and news. Thanks so much for all of that, Lisa, for taking us through all those names. But very quickly moving on, Polycab and Ipca Labs both will be in focus on the back of their management meets. While Polycab's 10% EBIT margin target by FY26 stays intact, Ipca Labs is aiming for a 19 to 20% EBITDA margin for FY24. Sharad is here with all the takeaways from both of those management meets. Sharad, good morning.
Well, yes, in focus we are having two important companies, and first we are having Polycab. Their management meet was there. As per the report by Nuvama, they have stated that the FMEG's division, that the fast-moving electrical goods division, that's roughly contributing around 10 to 12% of revenues currently. The entire rejig is complete. Overall, the company is expecting EBIT margins to come or to almost a 10% for FY26 itself. Apart from this, the company is aiming to accelerate their exports going ahead, and two positive commentaries coming in. First is, of course, when it comes to the capex visibility from big sectors such as the power sector, as well as the volume growth visibility. Apart from this, they are expecting market share gains in both the organized as well as the unorganized segments, and also they are ramping up efforts on the marketing costs as well, that is on the brand building and the influencer marketing. Apart from this, IPCA Labs would be in focus, and a report by B&K Securities has come, and they have given a statement that they will be re-entering the US markets by the end of 2024. Apart from this, there has been FY24 numbers coming in for 10% sales projections is there, while the margins is actually ranging between 19 to 20%. But a commentary is important for FY25, where they are expecting the margins to recover. Now, this is for the historical levels of what the margin recovery would be there. Apart from this, the API business, that is expected to recover from the second quarter of FY24, as the sartans issues has largely been left behind, and also the company is hopeful that they are confident also for Unichem's turnaround plans.
All right, thank you so much for that, Sharad. We'll move on then, and growth looks pretty robust, says ITC's CMD Sanjeev Puri in an exclusive interview with ET Now. Adds that they are firing on all cylinders and they see the FMCG as the next big driver for growth. Listen in.
The idea is to continuously deliver industry-leading growth, and what gives us the confidence is that we have established the right to win.
Industry-leading growth is incremental. The capacity you're building is telling me that you're preparing for exponential growth.
Well, it's like this. It's like this, that while we create the civil infrastructure, the line addition is in consonance with the market growth. Okay, that's how we do it. Because in a food factory, it's not a smart idea to keep on constructing.
Right.
There's a lot of hygiene standards have to be very, very strict here. So if we are to scale up beyond what we have constructed, it will be a completely isolated construction, adjacent but isolated. Right. So that's the point I'm making. Capacity addition will happen.
Okay. So before we move from the another unit, from biscuits to chips, everything is in one unit. I told you I've come with a hungry stomach to the ITC unit. What are the new businesses which you're incubating, which you think in the medium term, 3 to 5 years, will add at least 1,000 crore of top line?
Okay. So I will tell you in two parts. Let me tell you in FMCG, and let me tell you some completely new categories. So businesses in the medium term that will scale up are newer categories that we are incubating. One are certain adjacencies that Ashirwad and Sunfeast are getting in. Two are newer categories like beverages and juices. Third are categories like of the frozen snacks or the frozen.
Right, that was of course Sanjeev Puri with our managing editor Nikunj Dalmia. But with that, we're completely out of time on this edition of the show. We thanks so much for watching from Ankita, myself, and the whole team that puts the show together. And we leave you with the SGX Nifty, which is indicating around a mild positive start, and the market will take the action forward. So do stay tuned.